Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you to all of you who came out for the Thirdly, or we'll click on the digital link here tomorrow. We sure do appreciate the time and chance to get together. And for today's Market Carver, we've got a couple of topics lined up for you. One that ties into the Thirdly, if you happen to join in with that, I think quite nicely. We're going to talk about a new fund that has gathered a lot of steam, and we want to unpack what the fund is and how it's done and how we think about it. And then we'll return to some technicals and look at investor sentiment and some changes there. So we'll tee it off, and I'm going to let Andrew cover the Destiny Tech 100 fund and kind of give you the lowdown on how that's come about.
All right, thank you, Adam. So one thing as an allocation team that we're always looking at is whenever there's a new product, a new fund, a new way to get exposure in the portfolio to maybe a market that we haven't had access to, or maybe it's a different type of a strategy. We're always looking on ways to improve or gain better exposure within the portfolios. And so a lot of funds come to market, and then also a lot of funds get closed. But a lot of funds that come to market, we start looking at them, digging into them, and by the first titling, or maybe just looking at the holdings, some things look really interesting. Things that we maybe had never seen before. In this latest fund that's come out called Destiny Tech 100 is exactly that. What this fund does, and it's a closed-end fund, is provides exposure to companies that actually aren't publicly traded. And so the biggest one you can see on this pie chart here, I know there's a lot going on, but the biggest one is SpaceX, a company that probably a lot of people are familiar with, run by Elon Musk, does the reusable rockets. Very, very interesting idea, and it's really had huge growth. Other names like Stripe and a lot of other private companies, primarily in the tech space, are in this fund. Initially only available to accredited investors, to private investors, or pension funds, not publicly traded. And so by giving access to investors to these companies, it became really of an exciting idea on the first glance. But when we start looking at it and digging into it, we realize why maybe there could be some issues here. And we can see the popularity of it. If we look at the next slide, this again just started trading recently, and it exploded in growth, up over 600% within the first couple of weeks. We saw a lot of people really chase after this, and primarily because they really didn't understand what they were buying. When we start looking under the hood, we see there's a large management fee attached to this fund. There's some other intricacies getting involved that Adam's going to talk about with why having private investments in a fund that can be traded intraday can have some issues. But why we think it's an important topic for the Market Carver is because just because something may be initially based off its titling and maybe some of its holdings, or the fact that it's just had this huge growth of 600%, why we may want to take a step back and recognize maybe this isn't the most appropriate investment at this time, and really uncover and unpack what's going on with a fund like this. And so now I'm going to turn it back to Adam, who's going to discuss some of the other nuances with this type of investment.
Yes, absolutely, Andrew, and thank you. And again, part of our Thirdly talk and one of the themes was really the changing structure of the market and how it is important to have private market access. So the idea of this is in the right vein, giving investors a chance to have companies that you can't just buy on the New York Stock Exchange or NASDAQ. That's a fantastic notion, but the vehicle has to be right. When you buy an exchange-traded fund, it is typically comprised of equities that trade on the exchange. So you know day by day, minute by minute, what the value of that ETF is if you bought the underlying holdings. And so the price of that ETF will always be glued to that. In times of crises and really short-term periods, price can deviate from what it's actually worth, but the market is constructed as such that the dealers and Wall Street can actually profit off that difference. And so that difference is only going to be temporary, and it'll always be brought back to what is known as net asset value, or the value of the assets. If you take a look at this fund, that value is only going to be periodically updated because they're privately held companies. In fact, if you take a look at the Destiny Tech 100, the price that you would pay and investors are buying and selling on the exchanges has exploded in price, but the net asset value hasn't changed all that much. It is probably up from this December 31st, 2023 value because we're at April 10th. But if you look back, it's $4.94. So while the price has exploded to well, many times above that, the underlying value of those assets is 494. So the idea of getting private market exposure is great, and I'm sure you probably have neighbors get interested in this and following it. However, it is not a great way to invest. We want to go through, we want to get private market access through vehicles that actually allow buyers and sellers to transact at the NAV. Doing it through the public markets, I fear those neighbors, or at least the general public, is going to be exposed to some pretty severe pain when this fund returns to its NAV. So I think this is a great find by Andrew, and really the recognition that a lot of our job is determining not necessarily what to buy, but also what not to buy. That is as important as a job as we have. So I'll turn it back over to Andrew to unpack for you investor sentiment and give an update there.
Thank you, Adam. So this next chart, now we're going back to public markets. So what we're looking at here is investor sentiment. So one of the tools that we look at every week is evaluating what's the sentiment towards primarily the S&P and the NASDAQ 100. And are investors getting more bullish, or are they getting less bullish as different trends transpire? And so this chart here goes back the last couple of years. And we want to point out a couple different points. If we look back during the bear market in 2022, we can see that the investor sentiment got really low. We got down to single digit bullishness. When it got down, you see that green line kind of in the middle around October 2022, we got down to about 8% bullishness, which is extremely low, meaning there's very few investors that are positive, that are bullish towards the equity market. And when you have kind of the market wash out like that, it can be potentially a great sign that there's few sellers left to come in and push price lower. And we ultimately did see, obviously, the market then recovered, and we saw the market have a really strong rally over the last couple of years. Now we turn towards today. If we look back again, 2023, we had a 10% pullback, and what preceded that pullback was investor sentiment started to diverge. Price was going higher, but if you notice that green line, you can see the diagonal blue line there, it started to make a lower high while price was going higher, meaning that while the market was moving higher, there was less enthusiasm towards that rally up. And then again, we saw sentiment drop, got down into the teens, meaning there was still some bulls there, but it wasn't necessarily a major washout like we saw in 22. And then we again saw the rally, more bullishness increased. And then we started getting into this year, 2024, we started seeing about 80% of the market was bullish. And that's a good, healthy number. That's not getting 90% where things start to get a little exuberant. But then we start seeing sentiment begin to change again, and that begins to roll over. You can see that green line went from roughly 82, dripped down to the 70s. And then last week, and why we're talking about it right now, is we had just a 1% pullback in the market last Thursday. Very small. We still haven't even seen a 15-day new low in the market, but we saw this one day that saw the market weaken. And what happened to sentiment was it really saw a big drop. It actually fell to below the prior 2024 low, which tells us this market is seeing some skittishness. All it took was a 1% move in the index lower, basically off a new all-time high, and we instantly saw investors start to head for the exits and start to get scared. Now we're evaluating as the market is kind of continuing to recover some of that. We're seeing a little bit of shakiness this week as well. And we're trying to evaluate where is sentiment going to play out. But we are starting to see investors start to become a little bit more cautious after we had such a strong first quarter of this year. The market was up about 10%. Many investments above that, but then also we've talked about throughout the market, Carver, a lot of investments under that as they weren't part of that mega cap rally. But from a sentiment perspective, we're starting to see investors get a little bit less optimistic, a little bit less bullish. Still, we're at right now about 60%. That's still a very healthy number. We're not back to the teens or the 30s or 20s, which is where things can, where we start seeing a little bit more bearishness come to the market. But it's interesting to see that it just took a 1% down day to really see a shift in investor sentiment. And so we're continuing to watch this data, continue to see how investors are approaching as we start seeing the market getting this little bit of a pullback. Again, we're down roughly about 2-3% from a 52-week high, which is very normal, very healthy. But we want to see how do investors handle and start changing with their dollars, voting with their dollars as the market begins to see a little bit of weakness. So it's kind of very interesting to see that big shift in sentiment following such a minor move in the market.
Absolutely. And thank you, Andrew, as always. Thank you to all of you for giving us this time to give you an update from this week's investment allocation meeting. As always, we give you a reminder. If we can be of service, please give us a call, 800-928-4001, or scan the QR code and do it electronically. So thanks again. Have a great weekend.